You're trying to be funny. I'm actually being like for real here. I really think that this is a viable solution.
Well, it's printing more money though, right?
Somewhat, but welcome to the Real Estate Rundown. We're going to talk about a topic that is on a lot of people's minds right now. It's housing affordability. So Housing Wire just came out with an article saying it is time for the federal government to address the housing crisis. And in light of the debate last week, I think the election is on a lot of people's minds, just like how affordability is in the toilet at the moment for housing. So let's roundtable this question. If you are the presidential candidate and you have to devise a plan to restore the housing market in your 4-year term, what would be your plan?
Well, what's wrong with the housing market? Yeah. Are we in a crisis?
Affordability is
I say, yeah, we are in an affordability crisis.
I think
we are not in a housing crisis.
The federal government should give 30% off coupons to all the people that don't have houses. Right?
Print more free money? More
free
money?
Going.
Get the coupons, yes.
It's going hats. Okay, so Jason's plan would be everybody that doesn't have a house gets a 30% off coupon.
Yeah.
Okay, that's ridiculous.
Well, just like, what was one of the things that I think our current president, Biden, had shared that he wants to do is basically everybody at some, I don't remember exactly what it was, but it's some type of like credit and it's like first time home buyers or lower income, right? Like,
no, it's a first generation.
It was first generation.
So
yes.
basically illegal aliens that came
yes,
in.
Of course it would be in reference to that. That makes perfect sense.
Yeah.
And here's the reality though, is I think that a lot of those programs, like, okay, $10,000, credit if you buy your first home, but like, the reality is we're in such a situation where 10 grand does
it's
nothing.
About $60 worth of payment.
Well, and you don't get it up front because when I bought my first house, they had that tax incentive, but you didn't get it until you claimed your taxes. So you don't see it right away.
You still gotta come
and
up
then
with cash.
The next year they gave another tax incentive that was tax free. So I had to pay $500 per year for X amount of time until it was fully paid off. So at the end of the day, it wasn't even a really tax incentive anyway. So to me personally, whenever I hear that crap, it's so BS. It's just throwing in a persona out there that it seems like they're trying to help. And I'm using the word minority, not from meaning like it's a small group of people who are even going to benefit and use the program in the first place.
Right.
Well, and it creates more inflation.
It does create more inflation.
Print more money. Give more people.
That's exactly.
Money.
Well, and
the house prices go up even higher.
And they've already went up 54% since 2019. And so, if we were to do something like that, where would house prices end up being?
The affordability index is really, to me, what has to be addressed because you start looking at obviously
But how?
The interest rates, that's an issue. But the affordability index, right? Like how honestly, that's why I think this is a very tough question to answer. But when you really look at the simple fact of, just cost groceries, right? I think they theorized that they'd only gone up like 8, 10, 20%, depending on certain sectors. But there's a lot of stuff that's had, that are really common household goods that had over 100% increase.
There's a TikTok that was out. I just watched it yesterday.
Yes, we watched it yesterday.
And it was a guy that shops at Walmart, does the Instacart at Walmart groceries, and he bought 45 items back 2 years ago. And there was he went back and looked at his history, and it showed him it was like $126. And then there was a button next to it that says order again. And so he hit order again, and it populated all the same items. It was like over $400.
See, that's exactly what I'm talking about. It's like,
and
I'm going off of what CNN, one of the
it's a lie.
Hosts, exactly. That's what I'm saying is like, I felt like when they said it had only gone up like, I don't remember the exact number, but it was a very small percent.
Items.
Uh-huh.
They pick and choose items.
Yep.
Like, this hasn't gotten so much, so we're going to choose this one. We're going to choose this item. We're going to choose this item, and it's a basket of items. It's not like
housing is excluded also from it, which is interesting and kind of ridiculous. But let's get back to the question. If you're president, what would you do to address housing affordability?
Well, this is what I would do. I would give everybody a third. No, I'm kidding.
I'm like,
no, I'm kidding. No, I mean, I thought about this, but I don't know if this would work or not. But I mean, we all have like lower interest rates.
Yep. That's the biggest,
right? And a lot of people right now can't get a low interest rate mortgage. But what if you didn't own a home and you were able to get a low interest rate just one time for your primary home? You got a 3%. That's
a good idea.
But if you can't buy 3 or 4 of them at 3%.
It's one.
You're going to pay the higher interest rate, but you get one. And then also, I think you should be able to transfer those interest rates with you with the next house.
Oh, we talked about that.
Carry your mortgage with you.
Yeah, they port.
Yeah.
They port the mortgage to other properties. Okay, that's an interesting idea. So maybe
I think that would also probably bring the prices up everywhere because
it would create demand.
It would create a lot more demand. All these, obviously we would probably give our kids money to buy a house, right? That 3%, right?
Absolutely.
And a lot of other people would do that as well.
Right. But it is an interesting idea. So one time 3% mortgage.
Or a 30% off coupon. Just kidding.
Well, and I think we got to figure out, like, to me, this is where the path is a mathematical equation, right? Like and I already know what they theorize, that what is the really affordable index of what's the interest rate versus, per the areas, right? And I think it falls somewhere in like the high 5s and low 6s is what I've always heard theorized that's what really, the metric. It's not like too cheap where that causes frenzy, but not too expensive to where they opt out. And so, like, to me, I think, like, obviously what controls interest rates is the bond market, right? So to me, sometimes the issue, like the high interest rates is a symptom. So what is what's the real core problem? And like I said, I go back to the simple fact of affordability index, and that honestly comes back down to them printing fake money, right? Like, I still think, personally, not going off the deep end here, but we're still doing problems.
Just printing it.
True, like, total different conversation, but we're still dealing with a lot of problems from COVID when they falsely inflated and had to fuse all kinds of crazy money, from the PPP loans to all of the different things that went on, that we ultimately gave people money, created cost of goods that drove cost of goods up that shouldn't have. Well, and so to really get over the hump, we actually, to me, have to have probably a painful year or two to almost kind of reset the clocks. And I mean, that's almost what recessions do.
But it's not going to be painful to the upper end. It's going to be painful to the lower end. And the PPP money all went to
you're
business
right.
owners
because it didn't have the right regulation around, or not the regulation, but
you had a bunch of employees. You have 500 employees. You got millions of dollars for yourself.
Yeah.
So I think we talked about this on a past podcast, but there was that study done about PPP and how it inflated home prices.
Yeah.
And there was a direct correlation with the amount of PPP money in certain zip codes with, home price appreciation in those zip codes exceeding other zip codes. And so we know that, like, that did have an impact. And this is an interesting moment because I actually agree with Elliot.
Yeah.
I agree with you on, I think it needs to be a little bit more painful.
Yes.
Because I think that, everything else is inflated. How come nobody is talking about home price appreciation and how much of that is artificial inflation?
Oh.
Right? Like, what?
It's ridiculous.
Housing Wire said 54% appreciation since 2019 in home prices. How much of that 54% is artificial inflation?
It's because the interest rates were down to 3.
Yeah.
2.5, 2.75, 3%.
So are we going to see a 20% reduction in home prices? And I think the only thing that's keeping home prices high is the lack of homes.
Yes.
Right?
100%.
So we just have
that's
this
the only thing.
Because no one wants to
shortage.
get rid of the 3% interest rate. I mean, it's stupid. Why would you go and sell your house with 3% interest rate and go in a more expensive house with a 6% interest rate or 7% interest rate? It makes no sense.
Okay. But wait, let's get back to the question though. So Elliot, you really didn't say what you would do. So essentially you wouldn't do anything. You would just let it be painful for a little bit longer and work itself out?
No. The one thing I would actually look at doing, the opening up, I realize is a little bit dicey too, because it has to do with along the lines of what Jay was talking about. You don't have to look
at it. You're the president. You can do it.
Well, I would absolutely. I can't say that I would do it because I don't know the full outcome yet. And I would study it and I would review it, but would be actually like opening up assumptions and, you know, like those types of things, right? Being able to assume people's mortgages, because that's not going
to lower the prices, because people with the assumable mortgage will want higher price.
I understand that, and it's still an affordability issue. That's what I'm saying, is it'll get things moving, but it's like it's a double-edged sword on so many fronts. And that's really the issue. I mean, because then, of course, we could talk about, the housing crisis. Well, then new build stuff. Well, hey, cost of goods to build that house is so damn high right now with wood and nails and, you know, all of the things that are going on. Like I said, it's a double-edged sword on so many fronts that really, I think the only way through the murkiness is to freaking deal with it.
Okay. So how about you, Keith? I know you've got some ideas.
I would take the Fight Club effect.
Oh, okay.
and
okay, tell me more.
And reset everything.
Reset everything.
Melt it down.
Take everybody out of their houses.
Eliminate the debt completely as a whole and start fresh.
Eliminate the debt?
So eliminate.
We're just going to go to war with other countries and tell them we're not paying you anymore?
Well, what do you mean everyone knows us?
We already are anyways. They're like, we're just printing money. It's like, that's the same thing, right?
I mean, yeah, that's a whole...
I don't know what the solution would be, because depending on who you listen to, right, and your source of where you like to get your information, to me, the bubble should have bursted already, and it hasn't. I mean, shit's going to hit the fan at some point in time. I don't know if it's going to be anything
on
that we
some
experienced in the past.
Has to.
Because obviously there not as much predatory lending going on, or at all that there was back then, which is what caused that. But I don't see how things, they can't stay this way forever. And so I don't know what the solution would be, other than the other issue is whether you're president or not. You know, they don't have as much power as people think that they do. And it shouldn't even be called the Federal Reserve. It's not owned by the federal government anymore. It's a private entity.
It was never owned by the federal government.
The government, at the end of the day, has no say, very little say, on interest rates and pricing and all that. It's a very small group of people around the world that have all the power and money that say how this stuff is going to go down. So I think we're all just screwed. There's no solution.
Okay, so there's still not really a good solution. Kind of just needs to reset itself. Elliot would look at
opening up for assumptions.
Okay.
Making conventional mortgages more assumable.
Okay.
Because they're not assumable now.
Okay, so more of an assumable mortgage approach. That's interesting. I actually think the problem is affordable housing, not housing affordability.
Well,
and because of that, what I would do is I would look at providing grants or some sort of subsidies to builders to produce more affordable housing. And if we could get more housing stock built, for under like $250, right? If you could have more housing built under the $250 price point, kind of like a lot of these build for rents. I think that they should do build for rents that are actually build for sales, but they're on the same sort of scale as a build for rent. So they're very affordable and that people can buy them, and maybe couple that with some sort of first time ownership grant or program so that we can allow people to get into those homes for less amount down. And of course the price point would be lower. And yeah, so that's probably something that...
Like the projects?
No, not at all like the projects. Actually very, very different from that, Jason. And it's not...
Oh, projects that you can own.
I think that's not... You're trying to be funny. I'm actually being like for real here. I really think that this is a viable solution.
Well, it's printing more money though, right?
Somewhat. Yep. But...
And you're going to give it to the builders.
It's purposeful, though, and it serves a real purpose.
But why give it to the builders? Why not just give it to the people and let them get a percentage off, like a coupon?
A coupon.
Well, but like when you really look at the budget,
because the housing stock doesn't exist for them to go buy that's in that affordable range. So that's to me the largest catalyst of this problem.
I mean, this exists in. I remember we were looking at houses in Lake Tahoe.
Yeah.
and there was a house that was like super cheap and it was brand new. I was like, what the heck? Like, how is this so cheap, right? And you look in the comments or whatever, and it's basically you have to have lived in Lake Tahoe. You have to have a job for Lake Tahoe for a year or something like that. So you have to qualify to buy that house at that price by living there and for a certain amount of time and having like
because
you have to work. Expensive. You have to work close to that house or a certain distance or whatever. And it seemed kind of interesting. I don't know. That could definitely work.
The other thing I want to just throw a little gasoline on the fire in this is we're talking about one sector, right? Like at the end of the day, the budget is the budget. We're talking about not printing more money. Like our budget is gargantuan and it's inflated and misrepresented appropriated funds all over the place, right? So like what was it? Again, I'm just going off the cuff of memory here, but I think like the state of California alone, like their like federal amount of money that can't be found was something like almost $100 billion of money that's unaccounted for. Then in Washington, there was another like almost 100. We're talking about hundreds and hundreds of billions of dollars that is just freaking disappeared.
There's
not
trillions of
they're
dollars.
Stealing it.
I know that, but like let's. But here's what we're getting at. Is like there's the real estate industry commission wise has like approximately $100 billion that's paid out, right? So one of those curing those things would change, right? Like this is like one of the largest asset classes for Americans. There's $2 trillion of homes that roughly exchange hands every single year. And what I'm getting at by like the crux of this whole thing is if we actually looked at our budget, if we actually started holding things accountable, the money's freaking there. And it just really has to do with us tightening our belt and being accountable to the things that we want and need our people to do. So as president, if I'm making the decision, I may not make a lot of friends, but I promise you accountability is coming into those sectors. I'd adding that on.
Okay. Opening up assumptions and adding accountability.
Yes, crack that whip.
I love it. Definitely necessary. So Jason, you had an interesting chart you just pulled up on your phone that we were looking at yesterday. You want to talk about it?
You want to explain it? This is the unrealized gains or losses, actually, of investment securities.
Unrealized gains.
Yeah, so it was actually
but we're going to focus
losses.
on the losses for this.
Losses on securities solely reflect the difference between the market value and the book value of non-equity securities as a quarter of end. And you can see, I'll show this up to the people. Or give it to
put it on screen.
Yeah, but look at this. This was the great financial crisis.
This is the great financial crisis. This is banks. This is their losses, the unrealized losses. This is the great financial crisis back in 2008.
Holy cow!
2008.
And there's
this is where we are right now.
So think Silicon Valley Bank was definitely involved in this. Yep. They got ousted. Goodness. There was a bank run. But there are others that are in a similarly terrible.
So banks lost.
That's beyond terrible.
Banks, insurance companies, they lost so much money back in the financial crisis. This is where we are right now. It's insane.
How are we not insolvent as a country?
We are.
I mean,
that's what I would say.
All that money.
It's because they're printing. So what I always tell, party
keeps going.
I tell my son and I tell his friends and stuff that, hey, if you want to preserve what you have and build wealth, go and take all of your money, everything that you make, and transfer it into Bitcoin, and sit on Bitcoin, grow your Bitcoin, because this right here is going to turn into
that's scary
inflation and
right,
digital assets.
This is not financial advice, by the way.
Well, it is when I tell the kids.
Well, but it's also important for everybody to like understand that like with inflation, like that happens around the world, and like you literally get paid on Friday. Stealing. Your money's worth less on Monday.
You're saying that there's hundreds of billions of dollars that are missing.
Yep,
it's because they're stealing it.
Yep.
Okay, another topic. This has been a juicy one, but I want to shift to this other topic before we conclude, because it's pressing and a lot of people are feeling it. We're seeing a lot of institutional funds sell off swaths of their portfolios in certain markets, and I'm wondering if this could be the reason. Insurance costs have skyrocketed. And if you look at insurance as a whole, in 2023, it went up on average nationally 11.3%.
Holy cow.
But there are certain markets where insurance costs are up 23% in Texas, 21% in Arizona, 20% in Utah, 18.5% in Illinois. What is going on with the
That's
cost
insane.
of insurance? And this is impacting people's pocketbooks. Is this also a direct correlation to inflation?
It is, and it's the direct correlation of
yeah.
these losses that are
that's what I was going to say. Is this a claim?
They're trying to catch up because they have all these losses on the books, and these are insurance companies as well.
Yeah.
I'm curious though, what for like from a property insurance perspective, what is it that would have caused them to be losing money? Is people not paying?
Or premium. So basically, the cost to replace value, you know, like in Texas.
Yeah,
Texas is number one on the list.
increased.
We have like natural disasters.
The amount of payouts.
Exactly.
Yes.
Has increased, and so they've adjusted their premiums. I thought this was pretty fascinating.
Well, I think it's also
to restore your house to what it was.
It's also
it costs
the
more.
treasuries that have skyrocketed. The insurance companies buy all those treasuries and go, what are they doing? They have the unrealized losses.
So they're cranking up
losses.
Cranking up the
Losses yet to
premiums.
come.
You're probably feeling it in your monthly mortgage payment. You're feeling a little bit of a squeeze there from your insurance costs going up. And what we know is it's more difficult to obtain insurance. So it's something we got to keep an eye on. This is also going to impact home values. And I think that it could disproportionately impact the markets where insurance costs have increased even more.
Absolutely. Like I said, this hits on so many fronts, right?
Yeah,
This
we
is
had
like one of those
a
little
property in
nights.
Florida that we had an offer. The people were going to buy it, and they got a insurance quote, and it happened to be way $14,000 for the year.
We didn't know.
And they decided not to buy it
because of the insurance quote.
Because of the insurance.
Yeah.
That's pretty much what stopped them. From
That's what I'm saying.
Forward.
Like that's like intrusive, right? Like to the deal. Like that's like there's a point of covering it, but then there's a point of just like
doesn't even make sense.
It doesn't even make sense.
So what's going to happen?
Not have insurance, deal with disaster.
But if you're getting a loan, you can't forego it, right?
True.
You won't be able to get a loan.
True.
So again, price adjustment in housing could offset the increase in insurance costs. I mean, is that what's going to happen? I think that's what's going to happen. I mean, what's going to happen with that property in Florida that now we know it's going to cost an astronomical amount of money to get insurance on. The only thing that's going to offset that is price, right? Yep. Which is probably going to go down.
Yep. Yeah. It's about the affordability, right? That's what it is.
That's what it comes down to for sure. Crazy times. Anyone have any parting thoughts?
Well, after today's, talk here, I think we should be like, I guess I'll make my announcement. I'm going to run for president in 2028.
Why not run this year?
Might run,
As a Democrat.
No, it's interesting times, and but here the one thing I do want to communicate, because I think that it's really easy to like get stuck, I think, in these times and focus on the negative. And without a doubt, I know all of us believe, what you focus on does expand. And there's always opportunity. There's always a deal to be had. There's always clients to go out and meet, right? You just need to scale up your message to a broader audience, right? You have to increase your output to get the input of what you're looking for. And so again, I just want to pass along that message that it's certainly possible. And I think we just need to be aware of these types of things so that we can look at the market and adopt to what's going on.
Awesome. Thanks for tuning in. We'll catch you next time.